Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back, and thank you all so much for being here. This morning, we're going to take a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Just a reminder that tomorrow is Thanksgiving here in the United States, which means the stock market is closed. It is open again Friday, but does close early at 1 p.m. Now, I am lucky enough to have the next couple of days off. I somehow ended up hosting a dinner for over 12 people, so wish me luck because it's going to get crazy up in the house here. But I'll be back with you guys Monday morning for the next stock market update. Also, to celebrate the holidays, TipRanks is doing their biggest sale ever. They're offering 30% off new Ultimate and Premium subscriptions from Thursday to Saturday. So if you've been thinking about signing up, make sure you stop by the website for their Black Friday deal. Okay, let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning as investors wait to see a wave of economic data due today ahead of the market closures tomorrow. This includes the latest minutes from the Federal Open Market Committee. Currently, we have Dow futures down 0.39%, S&P 500 futures down 0.32%, and NASDAQ futures also down 0.39%. Bristol Myers Squibb has received marketing authorization from the European Commission for Zeposia. Zeposia is for the treatment of adults with moderately to severely active ulcerative colitis. These patients include individuals who have had an inadequate response, lost response, or been intolerant to other conventional therapies. Zeposia is a first-of-its-kind receptor modulator representing an innovative way of treating this disease. The Bristol Myers stock is rated a moderate buy with an average upside of 28.5%. Fluidics system and specialty engineered products manufacturer IDEX Corporation announced that it has entered into a plan to acquire Nexsite for $120 million. With this buyout, IDEX will strengthen its IPEC and ADS business units. These units design and create sewer crawlers, inspection and monitoring systems, and software applications that allow teams to identify, anticipate, and correct wastewater systems issues remotely. Nexsite has annual sales of about $50 million, and post the acquisition, it will become part of IDEX's fluid and metering technology segment. The IDEX stock is rated a moderate buy with an average upside just shy of 5%. Now moving right over to notable earnings reports. In the pre-market this morning, we'll be hearing from Fudu Holdings, Deere & Company, and Centogene, while the after hours remains fairly quiet. Yesterday evening, we heard from clothing retailer The Gap, who came in with weaker than expected results for their latest earnings report. Following their disappointing earnings, shares at the company have been declining and are currently down about 20%. Gap reported quarterly net sales of $3.94 billion, which was down 1.3% from the same quarter last year and failed to surpass the consensus estimates of $4.47 billion. The company reported quarterly earnings per share of 27 cents, failing to surpass the estimates of 51 cents. Their stock is currently rated a hold with an average upside just shy of 23%. We also heard from software company ADSK, who came in with stronger than expected results for their third quarter. Despite this, though, shares of the company have declined about 14%. ADSK reported quarterly revenues of $1.13 billion, which denotes a year-over-year rise of 18% and surpassed analyst estimates. The company reported quarterly earnings per share of $1.33, up nearly 28% year-over-year, and once again surpassing analyst estimates. The Autodesk stock is rated a strong buy with an average upside of 17%. We also heard from HP coming in with stronger than expected results for their Q4 on the back of a year of exceptional growth. The company posted double-digit revenue, operating profit, and earnings per share growth and returned a record amount of capital to shareholders. Revenue in the quarter was up 9.3% year-over-year to $16.7 billion, exceeding the estimates of $15.43 billion. Their non-GAAP earnings per share landed at 94 cents compared to 62 cents in the same quarter last year and ahead of analyst estimates of 89 cents. Their stock currently rated a hold with an average upside of 6%. And we also heard from sporting retailer Dick's Sporting Goods, who came in with better than expected results for their third quarter following an increase in net sales. Dick's Sporting Goods reported quarterly net sales of $2.75 billion, up nearly 14% year over year, and topping analyst estimates of $2.45 billion. The company reported quarterly earnings of $3.19, which was up 58% year over year and surpassed the estimates of $1.86 per share, so a huge beat there. Their stock is currently rated a moderate buy with an average upside of 13%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Adagio Therapeutics. Their stock is up after the company announced on Monday that they were expanding their management team to help support the rapid advancement of their COVID-19 drug. Under the ticker ADGI, their stock is up over 12.5%. They're followed by Pure Storage under the ticker PSTG. Their stock is up over 10% after beating both earnings and revenue expectations. And J&J Snack Foods under the ticker JJSF up 9.7% after reporting a strong finish for their fiscal year. Our biggest losers this morning are led by Nordstrom, who failed to meet analyst expectations for their latest quarterly earnings. Under the ticker JWN, they're currently down 25%. They're followed by The Gap under the ticker GPS, who, as we discussed, disappointed in their latest quarterly report and are currently down 20%. And Anaplan under the ticker PLAN, also down about 20% following their Q3 earnings report. All right, guys, that's going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. Just a reminder again that markets are closed tomorrow, and I won't be here in the mornings for tomorrow and Friday, but we'll be back at it Monday morning. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. I hope you have a wonderful Thanksgiving long weekend, hopefully surrounded by some friends and family, and we will see you back here next time.